Good morning, everyone, and welcome to Manitoba Agriculture Crop Talk webinar. If you have any questions today, please type them into the Q&A icon located in the bottom toolbar, and we'll answer them at the end of each presentation. This webinar is being recorded, and you will receive a link to the recording. Thank you.
Thanks, Laurie. I'd like to welcome everybody to the October 8th edition of Crop Talk. And a lot of guys have wrapped up harvest. I think they're in majority of the province. We're probably in that, mid to high 90s complete. I think soybeans and sunflowers and corn are probably the crops that are still needing some time to get harvested, but some recent frosts here I think are definitely going to help those crops get to the stage where they're ready to combine. A lot of the soybeans, I think, were ready to combine. I think some producers were seeing some green seed in some of the samples, so they were waiting a little bit. But I think, in general, I think a lot of the crop has been taken off and put in the bin. So I thought it'd be a great time to get somebody to come on marketing this 2026 crop. And David Droz is going to be with us today, and David is co-founder and president, senior marketing analyst for Ag Chief. I met Dave quite a few years ago. We were joking with each other. It's been over 20, I would think, but it was a good opportunity to talk with him again and get him to see if he could come on. Dave is from the Fanistel area, and I think maybe farms a little bit too, as well as manages Ag Chief. So I guess with that, David, I'm going to let you take it over because I think you've got a lot to present to us today. So grab the screen and we'll start with your presentation.
All right. Thank you, Lionel. Good morning, everybody. Just looking here to share the screen here. Technology, we're getting there. There, I believe you should be able to see my screen now.
You bet.
Right on. Okay, so again, thank you for having me out here today. I always enjoy an opportunity to share a market outlook with the farmers. I know it's quite concerning on their minds with grain prices moving lower. And Lionel's asked me to give you an outlook for this coming year. I thought I'd start out by sharing with you part of a presentation I did in January when there was a lot of concern with tariffs and Trump. And I went on a limb and said what to expect in the next 4 years. I'll explain that here leading into the more current market outlook. But before I get going here, I hope it's okay if I just tell you a little bit about Ag Chief, how this came to be. I know a lot of you on here may have already heard me speak before or aware of Ag Chief, but there are a lot of people that have not heard of Ag Chief before or David Droz, even though we've been around for 23 years. So as Lionel said, I grew up on the farm at Fanistel, Manitoba. Started farming in the early 80s after going to diploma in agriculture. And up until then was always helping out mom and dad on the farm, hauling grain, etc. Typical farm boy. And when I finished diploma in agriculture, you go back to the farm and you think, okay, maybe I can teach my brother, he's a year younger than I am, and my dad a couple of new tricks. So I was, and some of you might be able to relate to this, but I would be reading all the newsletters, and at that time, they were put out by the grain companies. That's all we had, and they seemed pretty informative. And I was reading these newsletters, and they all said the same thing. They advised us, now this was in the spring, and they advised us to lock in our flax for fall delivery at $6 a bushel, because if you didn't, it was going to go down to $4. So I thought, wow, okay, well, hey, all the experts are saying we should lock in our flax for $6 a bushel. So I did. So we thrashed the flax, took it off the field, and we started hauling it in the fall. And lo and behold, prices weren't $6 a bushel. They weren't $4, they were $9. And I had locked in 25 bushels an acre and only grew 23. So, I learned what it was like early on in my farming career, what it was like to write a check back to the grain company. And I thought, this is no fun. Like, I got to figure this out, because listening to all the news didn't help me. All the experts were wrong. So I started taking some courses. One came out to Starbuck, Manitoba from Assiniboine Community College, and they shared with us fundamental analysis, seasonals, but they also shared with us charting and technical analysis. And that was my first introduction to charting. And I thought, you know what, this really resonated with me. I says, this is a way to cut through all that news. And therefore, I started to learn more and more about charting. And then in the 90s, I became a commodity broker. And for 5 years, I did that. Not that I went looking to do that, but the broker I was working with asked me to help him one winter, and that accidentally worked into 5 years. And my brother, who was also farming with us, wanted to farm on his own, and I was allergic to grain dust. So I says, you know what? I'm enjoying being a commodity broker, helping farmers hedge their grain, etc. So I rented my land out to him and stayed as a commodity broker. And there was a lot of times where I would just call the farmers who were clients of mine and say, hey, we just sold our cash oats for $4 a bushel. I think you should too. The charts have rallied up. There's a reversal pattern here. And, looks like it's going to turn down. They thanked me and said, hey, I'll get right on that. And lo and behold, market turned down. But in doing that all day, I didn't make any money because as a commodity broker, you're on 100% commission. And farmers didn't short the market. They didn't buy a put, but they had sold their cash grain at the top of the market. And I provided some very valuable advice stemming from charting and technical analysis. And I thought to myself, 95% of the farmers are not using a commodity broker like me. That's a huge pool of farmers that are looking for help and they're not getting it. So that's what got me the idea to start AgChief back in January of 2002. And when I went around talking to people in the trade about my idea, they all said the same thing. Oh, David, don't even think about it. Farmers will not pay for information. Others have tried and failed. Undaunted, I asked 12 farmers what they thought. And you know how your friends are. Yeah, good idea, David. And then you ask them a tough question. Will you support me in my first year? And that's how I got going. And thanks to all the farmers that are with us for proving all those naysayers wrong, because I certainly do enjoy seeing what the charts are going to do, anticipating and predicting what's going to happen next. So, with respect to that, I was on both sides of the desk, so to speak, farming and then a commodity broker, learning more and more tools about charting and working with farmers, and that allowed me to start AgChief. Now, as I go through the presentation here, I'm going to share with you a lot of charts, not so much fundamentals, because at AgChief, our niche is charting and technical analysis. We believe that's the best way to cut through the news or the noise, as I may call it. And I bet you would agree. There's a lot of noise in the marketplace here for the last 8 months. And so therefore to decipher how to cut through, what's going on with tariffs, et cetera, we just relay back to the charts. And so therefore, as I start the presentation, because the concern was tariffs and the new president, what would happen, I said, well, he's been in power before. So therefore, why don't we look back to see what grain prices did during his term the last time? And see, us chartists, we believe that patterns repeat because history repeats. And that's because human nature doesn't change. You think about it, at the top of the market, the news is always bullish. Expectations are for the market to go higher. We as a farmer are reluctant to sell. And before you know it, the market turned down. And you go, well, what happened? It was supposed to go higher. And at the bottom of the market, the news is the most bearish. Expectations are for lower prices. And then we go, well, if it's going to keep going lower, I may as well just sell here. And lo and behold, the market turns around right after you did that. And I'm sure some of you can relate to that as well. So, because we have an understanding of what the news is like at both extremes, that's a check mark on our list of what to look for in anticipation of the market turning. And here at AgChief, we use the charts and technical analysis to help our clients sell at or near a high before the market turns down. And don't get me wrong, if you're using fundamental analysis and seasonals, et cetera, and you're doing a great job of marketing, don't change a thing. But for us at Ag Chief, it's the charts is what we rely on. And if the fundamentals are at odds with the technicals, I've learned to rely on the technicals. So taking a look at the first slide here, this is the corn monthly nearby futures chart. Now, what I've got here in the red box is the term when Mr. Trump was in last, from 2017 to 2020. And the gist of this is that prices did not go up until his term ended. Okay. And that'll be kind of the theme here as we go through the slides. So that happened with corn. It was trading $3 to $4 a bushel. Well, we're moving back down in corn now. Back in January, this is the slide ahead then, corn was 485. So here today now, this morning, it's at 422. It's moving back down. And we anticipate that it'll continue to move down here to that 360 area due to a record crop this year. Taking a look at the next slide, this here is the soybean monthly nearby futures chart. And the range was 8 to 1070 when Mr. Trump was in power. And here now, we are already down at 1020 a bushel. We're in the range. And you can see prices did not rally up till his term was over. So the same thing here now happens with Kansas wheat. This market was trading 4 to 550. Here today now we are down in that 493 area, so we're within the range. Minneapolis wheat back then was trading 5 to 650. Today here we're at 555. We're in the range, and at the time we were 625. Spring wheat during that period was in a sideways range. You may remember trading between $6 and $7 a bushel. If we could get out into deferreds and get 730, 735, we were doing good. That was the highs we were seeing. And now we're starting to fall back into that $6 to $7 range. Taking a look here at the next slide, this here is canola monthly nearby futures chart. And this one was trading between 440 and 540. Now, thus far, we're still above that here. We're at 615. But nonetheless, we do believe we're going to go into a sideways range. The range may not yet be determined, and I'll share that with you as we go forward. Crude oil, monthly nearby chart. This one here was trading between 40 and 70. Right now, we're in just over $60, so we're in the range. When Mr. Trump was in power last, crude oil actually went minus while he was in power before it recovered and came back, and went higher only after his term ended. Taking a look at the next slide here. This here is the US dollar index, monthly nearby futures chart. The US dollar went straight down after he began his last term and never went higher. So therefore, we were predicting that the same thing would happen. Right, lo and behold, US dollar has gone straight down since he came in, and now it's started to go more sideways. But it did have that drop initially, and we aren't believing it's going to go up anytime soon. Having a bit of a bounce in here, but we believe that'll be short-lived before it resumes the downtrend. Canadian dollar monthly nearby futures chart was trading 73 cents to 81 cents. Here we're a little bit lower than that right now, but we are anticipating the market is going to recover here as we move forward. Taking a look at the December Canadian dollar, you can see that it did rally from the beginning of this calendar year to where we got to this about a 4 or 5 cent rally. And that is exactly what happened when he got into term the last time. So we were predicting this move up in the Canadian dollar. In fact, we were making recommendations to convert US to Canadian when we were down that day where we tipped under 69 cents because we were anticipating the market was going to turn up. Why were we anticipating the market was going to turn up? Because we were down at a level here on this monthly nearby futures chart. You can see around 68, 69. We were there in 2020 and we were there in 2016. And the market never stayed down there very long. It shot straight back up. So because that was support, we believed it would hold and move up. Plus, we actually gapped down that morning where we opened lower and started to come back. And when you have that pattern where you come back to the previous, in this case, month's low, it's a buy signal. So therefore, we saw that happening, and we look for that oops, it's called on the weekly and daily charts too. And that gave us the confidence that we were going to bounce off this line of support and move back up. Now, if you may remember, that morning, the news was extremely bearish. I was looking at the wires. You could not find an economist or anybody out there that was forecasting a higher Canadian dollar other than ourselves. They were all talking about doom and gloom, how the Canadian dollar is going to go lower, and life's not going to be good. And this is just a perfect example of how this buy signal at support cut through all that news. And the market did indeed move up. Now, with the pullback here to the 71, 76, 72 area, that is support here now on this pullback. And we are still friendly to the Canadian dollar. Therefore, we actually would recommend, if you do have a need to convert US dollar to Canadian dollar, this is the time to do so before the market starts to move back up. Taking a look at the next slide. So there's a tip for you. We've been buying the Canadian dollar down here, so to speak. Monthly nearby canola futures back in the day actually traded sideways for 7 years, not just 4 years. And the range was roughly $12, $11.50, $12 on the high end and about $9.50 on the low end. And we endured that for 7 years before the market turned up. Now, one of the things about a pattern like this is when you go sideways in a rectangular pattern, the longer you go sideways, the further you expect to move when you do break out. And you can see here when we broke out, the market did indeed rally to new historical highs. It's pulled back here now. It got as low as 540, which is the highs we saw through that 7-year period. So old highs or resistance back then become support now. So right now, that 540 area has proved to be support on setbacks, and it will remain support unless it has a breakdown below that. But right now, we're at 615. We're pulling back down, and I'll share with you here what we expect. This is the November canola futures chart. It was going sideways as well here between 580 and 665 before it broke out to the upside. Again, with a rectangular pattern, you measure the height of the rectangle, add it to the breakout area, and that actually gave us an objective of 750. The market got to 750, and then there was a reversal pattern called a Harami on a candlestick chart that developed, and that market then started to move down. The market here then, on the next slide, broke an uptrending line of support, this black one, and that indicated that the rally was over. That was confirmation. It broke down. You had a little bounce back towards that uptrending line of support, and then it resumed the downtrend. Now we're in a downtrending channel, putting in lower highs and lower lows, which is indicative of a downtrend. When we turned down, it was on August the 11th, forecasted that we would move down to 580. And we're getting closer to that level. And why did we pick that? Well, that was support for so long. Old areas of support, they're kind of like a magnet where prices will move down to. And it's the same with old highs. Prices often move up back towards old highs. But they're also objectives, but they're also areas of resistance. And that's why it's a good idea to make sales when you rally back to a previous high. But in this case, we don't believe we're done going down just yet. Looking for the market to test supports at 580. And our downside cash price objective, we believe, will be around $11 to $12 a bushel. Taking a look at the next slide, this one, same slide, November canola futures, just want to illustrate here that a gap developed on the way down. Now, we believe that could be a midpoint measuring gap. If it is, you measure the distance from the top of the rally at the high at 750 down to the gap area at 650, extend that down, and it gives us an objective of 550. So therefore, we do believe this market will test support at 580, likely not hold, would likely get under the contract low at 570.60, make a new low, and slip all the way down to 550. So that is our new downside objective based on the chart. Now, all I'm really doing here as an analyst is relaying what the chart is telling us. Okay. I'm no smarter than anyone else. I've just learned to interpret chart patterns. And therefore, don't shoot the messenger, but I'm just, relaying what we believe is going to happen. I have a lot of faith in the charts over watching them for the last 40 years. And I've seen lots of circumstances. Therefore, I can often relate back to when we've seen things like this before. And if you think about the fundamentals that are going on with canola, well, why wouldn't it move back down towards 550 given what we know today? Taking a look at the next slide here, um, where's my next slide on canola? I want to just back up a bit here. Okay. Anyway, what I wanted to relay to you on the monthly chart, which was that we were down at this 540 area last year. So therefore, I just see no reason why we wouldn't get down to that level again, given that, China's not buying canola from us right now. Year to date, we're shy 1 million tons already on exports relative to last year. Exports have only been 700,000 tons relative to 1.7 million tons last year. Well, that canola is starting to back up in the country. You're already seeing it moving to the crushers. The crushers, aware of this, have widened the basis. The basis is not as attractive. They're also filling up in the nearby delivery periods. This is causing a problem in the country right now as farmers are looking to sell canola for cash flow. And sooner or later, that canola is going to need to be priced for that reason. And that is putting downward pressure on the market. And this is why on minor bounces, you're seeing limited upside because there's more willing farmers to sell that bounce before it goes lower. And the farmers that had started selling earlier, of course, goes without saying, they're pleased with what they did. They all wish they did more. But on the other hand, this also causes a challenge for someone, whether they sold some already or not. How do I create cash flow this year? How do I take advantage of the marketplace? And unfortunately, we believe we're moving lower before we move higher. Okay. And therefore, we have a lot of clients talking to us about that and say, well, should I sell now or not? What's your expectation? And we'll work through that with them depending on their own farm operation, what they have going on. Yes, we make general recommendations and alert farmers when to sell, but nobody is general. So therefore, we do talk to our clients and help you out in what you're trying to do on your farm. Taking to the next slide, I got in here some upside objectives now, which I'm sure you're interested in. It's usually the question we get is, how high is canola going to go? And I always say, well, we got to stop going down first before we can really evaluate how high we can go. And right now we're at 615. As you saw, our downside objective is 580 to 550. On a bounce in here, 645 is going to be a tough area to get over initially. If it can get through that, then 665 or 675. But right now, we don't see anything in the cards higher than that, given that we are building carry out with reduced exports, etc. Therefore, on a bounce, we've been recommending sell $13 to $14 a bushel. And some of your best prices are at the crushers. They're in the deferred months. Unfortunately, this doesn't help somebody who needs to sell between now and December because it's getting pretty hard to find that $13 a bushel. So therefore, bounces are meant to be sold. And unfortunately, we as farmers, we're wanting to sell the previous high. So we say, well, when it gets back to that high, I'll sell. And then it goes down. Then it bounces again. And it goes down again. You say, well, it gets back to that high, I'll sell. And nonetheless, you're just waiting all the way down to the bottom. And that's fine if you don't have a need to sell before the market recovers. But honestly, with the amount of calls we're getting about farmers needing to sell before December 1st, That's going to limit the upside on canola and most of the grains here until we get past December 1st. So therefore, if you're wondering why aren't we getting bigger rallies, well, it's because of those circumstances. Taking a look at spring wheat, another market that continues to move lower here. We are looking for a seasonal low in the wheat market and for it to rally. How far do we think it could rally? Generally, if you get 70 cents a bushel, that's about a normal bounce in the market. We'd be willing to sell spring wheat on a 70-cent rally. The futures here would get up into that 610, 620 area if we held here at 550. In the cash side of things for 113.5, we'd be looking for $7 to $8 a bushel in Manitoba on specials or use grain pricing orders. The 8 might be hard to get. On a good day in Manitoba or Alberta, you may see 8. But what I've always said is aim for the middle of the range we're giving you. You're way more likely to get a fill. So if you're looking to sell spring wheat, if you see 750, it's a good place to start selling some. If you want to be a little more aggressive, you can start at 7.25. But we don't intend to sell wheat under $7 at this time, as we do anticipate the market to turn up here. Now we're pulling back after a minor bounce here on this chart, but that was only because we gapped up when September expired and then it was replaced by December. And now December's just pulled back down to where the September was. Last year, we got as low as 538. So therefore, as long as we stay above that, I do believe there's opportunity to move up into this time period here in October, possibly get a 70-cent rally. I know that's a stretch saying this as we're making new lows here on the daily contracts, but we're actually looking for a place to recommend to our livestock producers when to buy feed wheat and when to buy feed barley. So as you can see on the next slide here, that this is the Chicago Board of Trade wheat futures. You know, we are also in a sideways range for the last 12 months and approaching support again. And we'd like to believe that we can turn up off support at this time of the year and get a bit of a rally going. So we're not in a selling mood right now at these lows. We're actually looking for an opportunity to alert livestock producers when to pull the trigger and buy feed wheat and feed barley. We probably would have done it already, except we're hearing that there's more feed grains around this year due to inclement weather in areas. And therefore, we weren't in quite as big a hurry. Plus, we got that record corn crop coming in the U.S. And corn market typically goes down into November, doesn't really like to get rallying or turning back up to about December 1st. So we do believe there's still going to be additional pressure from the corn market. And the soybean market in tandem generally tends to go down and doesn't put a low in until, say, October, November. So we don't believe we've seen the lows yet. Taking a look at the next slide, just shifting gears here a little bit. This is the feeder cattle monthly nearby futures chart. We believe we're getting close to putting in a major top. We believe this is the blow-off stage of the market where you're accelerating higher like this. Now, last month, it actually didn't really move much higher. It kind of stalled out, and we got to bounce back to that high right now. This market needs to move through this high to keep going. If it doesn't and starts to move back down, then that's another sign that this market may be getting top heavy. And you may say, oh, but we're not replacing herds fast enough. There's no reason for the market to come down. Well, let me tell you, the news is always the most bullish at the top, and bull markets die under their own weight, meaning when the longs in the market start to sell, they first sell to take profit, then they sell to protect profit, and then they sell to stop losses. And that causes a market to go down just as fast as it went up. Now, taking a look at the next slide, this is the live cattle monthly nearby futures chart. And here you can see that last month we didn't even get as high as the top that we saw in the previous month. And therefore, this market also looks like it's running out of steam. And again, we are looking for a high in here, if not here already, to be a major high before we pull back. And we get a lot of questions. Well, how far are you going to pull back, David? Well, typical Fibonacci retracements from the low in 2020 to the high that we have here, 38.2 comes in at 184, 50% at 164, and a 61.8% retracement comes in at 144. And therefore, those are potential numbers that we could pull back into. We're also starting to see the cash soften. Therefore, it may be a sign that consumers have said, you know what, I'm just not paying any more than this. Like, I'm going to switch to something else, or they're not buying as often. And all of these are a little bit of signs that possibly we're getting very close to topping out if we haven't already. So, another sign that I watch for in the marketplace is what are farmers doing or what are consumers doing, et cetera. Well, we've gotten calls. I talked to someone here that called into the office one day and asked me, says, I got extra cash right now and I'm looking at buying cattle to defer income. What do you think? And I hated to burst their bubble, but I said, be careful. Like this could be getting toppy here. So when you have farmers who've never bought cattle before, starting to think it's a good idea to buy them at record highs for whatever the reason, whether it's to build the herd or et cetera, it's another sign that we could getting very close to the highs. Soybean weekly nearby futures chart. This one's just going sideways too, just as some of the other markets have done for the last 12 months. Cash side of things, just keep selling $12. It's being offered almost every day in here lately. We made a couple of recommendations earlier in the year at 12. 12 was about the high we saw last year. Yeah, you could have got it higher than that if you went out way out into the deferreds by about 6 months or so. But for off the combine, you want to move soybeans. $12 is the magic number. Technically speaking, we've got our ranges here on the futures charts between 1060 and 1080 on the high and 960 and 940 on the low. We're smack in the middle here now at 1020, expecting we will see some additional weakness as harvest progresses. You also got to keep in mind the China has not bought a single bushel of new crop U.S. soybeans yet. So they're not only not buying canola from Canada, they're not buying soybeans from the U.S. So until things change, rallies are going to be limited. And I believe as farmers selling picks up, that is what will ultimately pressure these markets down into November. Taking a look at the next slide, this is the cash soybean price chart. We create our own cash charts as well. And like to compare the cash to the futures. And here you can see the top line is at $12. Well, what used to be a low in 2024 became a high later in 2024. That's resistance. On the downside, draw another line at 10, that's support. So we're looking for soybeans to continue to trade in this $10 to $12 range, with 12 being the upper edge. So therefore, there's another recommendation for you right today. If you're into your soybeans and you're wondering whether you should sell them, $12, let them go. How much you want to sell is up to you. If you're not sure, give us a call here. We can help you out with that. Peas. Yellow peas here is another market. There's a lot of interest in this year. We now have burdensome supply, lack of demand. So therefore, once we broke below 9, the market then collapsed. And 9 used to be areas of resistance, which once we pushed through on pullbacks became support. And therefore, we knew that if you got down under 9, you were breaking down. And we've been aggressively selling yellow peas this year, forecasting that they'd go lower. When they broke here, when the combines got rolling and the yields were better than expected, there's some phenomenal yellow pea yields out there this year. Market did go all the way down to 6 very quickly, which I've got a line of support drawn there. It did dip a little lower in 2013, 2014. I'm not saying it can't do that again because we do have quite a carryout. But for the most part, if I take a look at this next slide to tell you what to expect, I drew another line at 7. So we believe for the most part, peas are going to trade between 6 and 7, 8, 9, 10, they're all gone. There's just simply too many and not enough demand. And if you look back to 2013, 14, when you broke below 7, you didn't get back up above 7 for the full year till you chewed through that surplus, till you chewed through the pile. And the same thing happened in 2017 when you broke below 7. You stayed below it now up until 2020. So therefore, history repeating, looking back what happened before with this type of a carryout. This is an average P price among the three provinces. We believe the average price is going to be tough to get above 7 or 7.25. And in Manitoba, unfortunately, prices are lower than the other two provinces. Now, I have a range here of 7 to 750, but it's 7 Manitoba on the upside, 7.25 Saskatchewan, 750 Alberta. It is going to be tough to get much over 7 in Manitoba. I wouldn't be reaching for much more than that. Taking a look at the next slide, rye is also another crop that was a lot of interest, and there's oversupply now. Therefore, on a bounce, 450, 475. I hate to say it, you're not going to see 6. The odd 5 may show up here or there. I would be jumping on that and letting your rye go if I ever saw 5. I just can't tell you if you're going to see it or not. Therefore, if you want to move some out here and there, that 4 to 475 area is about as good an area as any to let a little go if you're looking to sell rye. Taking a look at the next slide, this is the corn weekly nearby futures chart. This one here rallied up into an area of resistance at 430 that we had identified, and the market's starting to pull back down now. We believe this one will pull back to last year's low at 370, 360, just through the fact that the USDA is forecasting a record corn crop down in the States. On the cash side of things, the 6s have disappeared, but if you happen to see 5 or 550 in the deferred months, I would be locking in some at that. It's going to be difficult for this market to get back up to 6. Taking a look at the next slide, this is the oat monthly nearby futures chart. This market is also moving lower. It actually just made new contract low in the December futures contract here this week, getting down to 286, 289 here this morning. And that to go back to 286, you got to go back to 2020, December of 2020. So this is a 5-year low. I'm not as bearish to oats as this chart would indicate. I'd like to believe that support in here will hold, similar to the wheat, and that they'll both start to move back up. They have a seasonal tendency to do so, for wheat to rally in October, and for oats to start to rally and move up into January. So if you're looking to sell oats seasonally, we're going to look to see where it is in January. On a cash side of things, you're targeting 4 to 450 in Manitoba. I've had often saying you're not going to see 5, and I'm going, well, I'm not going to say you're going to see 5. If you see it, you sell the whole crop, but I'm not forecasting it. I don't deny you it either, depending on circumstances. But right now, the millers, they're filling up here between now and December. There are crops here that are no bid till January in certain places, whether it be canola or peas, etc., or even oats, because farmers are looking to sell something that's profitable. They can't necessarily move everything. And the challenge I'm hearing is bins are full, David. I've got to haul stuff to town. What do I haul to town? What do I do with this stuff I'm hauling to town? And for the most part, as they've been calling, I've been saying, well, just price it. Just haul it in, let it go. It's the cream on top of the bin, so to speak. You've got record yields out there in many places. And this is a tip for you here now is again, if you're unfortunate and you did not get a yield, I understand. But if you got good yields and you look at today's price and you sell the crop, are you getting near record gross revenue? Think gross revenue rather than price, because the price isn't coming. But if the gross revenue is there, don't let it slip away. You will farm another day. So that's another tip here that we've been sharing with our clients, asking them how the yields were, and then say, well, what is your gross revenue if you sold that today? and they get some thinking just a little bit differently about managing risk and marketing the crop. Don't get married to price only. Think gross revenue. So with the oats here now, we're down into support in this 290, 289 area. I like to believe it'll hold here. Of course, if you get down under 290, it's going to slip some more. But support is support till it breaks, and I believe oats is probably as cheap as it should go. Uh, I believe we will see a move up. How far? We got to get above 325. That's your first area of resistance in order for it to extend the rally beyond that. Can we get back to $4 on this chart? Oh, anything's possible. Might have a little bit of trouble though in that 350 area. So cash side of things though, yeah, you see 4 to 450. Let oats go. So coming up on the end of my presentation here, what do successful farmers do? Well, they manage risk. And to me, marketing grain is all about managing risk. It really is. Therefore, have a marketing plan. When we're down here at these lows, is a good time to pull up that napkin and say, hey, here's my yields. If we get back up to this price, I'm making money. I should maybe sell something there. So yes, if spring wheat, for example, rallies 70 cents a bushel, how much will you sell there? If you don't make that plan today, you'll likely start planning it when we're up 70 cents and it may be at the high already. So therefore, we make our best decisions on what to look for to the upside when we're actually down at the lows. And then we have the discipline not to raise the bar when we get up to that price. I know we as farmers were guilty of that. Oh man, news is turning more friendly here. I don't want to sell my wheat for $7. I'll pull that order. Maybe I'll get 8. And before you know it, the market's back down to 650. So, stick to the discipline with your marketing plan. And again, determining that break-even price is important. I don't advocating selling at a loss if, just who wants to sell at a loss? I realize if the yield's not there, well, that's a little bit different. Know your cash flow requirements. So, when you get a rally in the markets, think out further though to cover some of your cash flow requirements. We often get this, oh, I don't need to sell right now. I don't need money till January. Okay, well, you've got a rally here. Why don't you forward price and lock in some grain for delivering in January? Now, there's an idea, because if you don't, likely by the time we get to that deferred period, the price will be back down to where we are today if nothing else changes. So don't just think pricing for tomorrow. I don't need grain today. I'm not hauling this week. I mean, if you're only hauling when you need money, that's not the best marketing plan. It's a plan, but I think we could do better and get you at or near the highs. And one way to pick up that extra 50 cents a bushel in a sideways market like we're going into is to keep selling out into deferreds. So if you keep selling, 50 cents more into deferreds every time you rally into resistance for the next, 1, 2, 3, 4 years, you're going to keep picking up that cost of carry, and that is market is paying you to store that grain till then. So that's something to consider as well. Another way to put some extra cash in your pocket in a period such as what we're heading into here now. Again, there's ample supply. Demand isn't that great. There's tariffs flying around everywhere. There's just not a lot of encouragement for much higher prices, both from the buyer's end of things. They don't want to get locked into something that may cost them more later. Or from the farmer's point of view, you've got selling requirements based on your cash flow decisions in the next 2-3 months. Take advantage of rallies to get something done. So like I say, take advantage of those profitable pricing opportunities. If you're not sure, this is what we do here at our company is make alerts when it's time to pull the trigger on those rallies before the market turns back down. And once you make a selling decision, just move forward. Too many times you may sell and it may go a few cents higher and you're kicking yourself for not waiting. I had to get over that when I started Ag Chief. I would say sell, and then the market went up a little bit the next day, and I would feel bad for everybody and myself. And then a client walked into the room one day in office and said, David, you go crazy thinking that way. Just keep doing what you're doing. Like you're telling us where it's going. And when it rallies up so much, you're giving us a recommendation to sell. It says, waiting for the exact high of the year is not what we're all looking for. We have cash flow requirements. We need to take advantage of the zigs and zags in this market so that we're selling up at or near a high, so you're not forced to sell at the bottom, the inevitable low that's coming around the corner, because you didn't take advantage of that rally. And really, that's all what marketing is managing risk and taking advantage of the opportunities that present themselves. So here now is a summary of the prices that we're aiming for here. Um, Soybeans, $12, is there today. Go ahead and sell your soybeans. Corn, if you can see 5 to 550 in the deferreds, and you can, I would be locking some in. Canola, 13 to 14, might be tough to see. You'll get into that range way out in the deferreds with the crushers, but it is getting more difficult to see. But at this point in time, I'm not really keen on telling anyone to sell under 13. If you're forced to do so, I understand. But nonetheless, we're not making a recommendation this time if the prices are under 13. We've made pre-sales to anticipate, harvest lows so that we can wait for the next rally. When the next rally come, often we see a rally up into January if we don't get one now. And realistically, that could be the period that you're looking for to pull the trigger on a lot of these markets is into January. It's once we get past the US soybean and corn harvest and things start to, turn back around, the grain's in the bin, costs a little bit more to get it out of the bin, farmers are reluctant to let it go. And therefore, from a seasonal point of view, yeah, if we don't get a rally sooner than later, it's probably it could head down into November, and like you say, even December 1st before we start to rally back up into January. Spring wheat, 113.5, I mentioned 7 to 8. That 8 could be a little bit high here in Manitoba. 750, probably more realistic. With oats, 4 to 450. I know we're getting into the lower end of the 4 to 450 range right now, but also believe we're near the bottom of the market. But you may have to go out into deferreds to get that. And as I mentioned, we as a farmer like to aim for the top number I've got here. Looks a lot better on our budgets and for what we can purchase with what we sell that for. But realistically, if you aim for the middle of the ranges, you're way more better opportunity to get a fill on your orders. Okay. So that's what I would suggest. And for those of you here that maybe are looking for some help with your marketing, we're going to launch a harvest special here. You're the first to hear about it. I haven't promoted it yet via email or via Facebook, etc. But for $27 plus GST, you can work with us here until November 30th. With that, you would be getting our premium service package here, where you're able to talk to our advisory team. They're here to help you navigate what you're trying to do on your farm, can talk to you about what the markets are doing. You'll get our alerts, our timely sell recommendations. I do a monthly market outlook on the first Thursday every month. You'll also get that, which is similar to this, but it's not this long. It's only about 10 minutes long. It keys in on the main crops such as wheat, canola, oats. Um, and then we also do a daily market analysis with a chart and strategy, in previous sales, so you can help navigate what you'd like to do there. And then there's so much more. But nonetheless, if any of you would like to take advantage of this harvest special, just give us a call here at the office and mention the harvest special, and we'd be glad to get you set up on that. And then that's the end of my presentation here. If you want a little more information about AgChief, just go to www.agchief.ca, and there's a lot of useful information there on our website, as well as how to get a hold of us. So thank you for your time here today.
Hey, David, thanks. Good presentation. And just a couple questions. One came in and it was regarding, I guess, looking forward for next year's crop. We're being in the position where we have to start looking at ordering and buying seed. Do you see us, any of these crops, pulling out of where they are, or is there a magic crop you're looking into?
Here's a tip and a very good question. We're starting to get these questions as well. The crop to grow is the one that your neighbors are not going to grow. There was a year when no one wanted to grow oats. We put half our farm into oats. At the time, oats was about 250 a bushel, and we sold it for 4. This year, highest price crops, green lentils, green peas, brand new growers growing them first time, and oversupplied now. Prices take a nosedive. So therefore, yeah, try to figure out what no one else wants to grow next year.
Okay. And that's going to be a hard one to do because no, everybody's probably got the same question.
Right. And it's so early in the year too. So it's a tough one for me to say, hey, grow this. But I mean, for the most part, you've got your rotations and you've got some flexibility with some. And again, we can work with you through that too if you give us a call here at the office.
Okay. And the other question that came in is what are you thinking about fertilizer prices for this fall, next spring?
Uh, Good question. This fall here, I've maintained with 4600 not to pay over $800 a ton. We have seen it pull back here recently, and some prices are dipping under 800, some are still above 800. We were going to give it, into this fall to see if prices could soften some more. I'm not saying we're going to get down to 660, which we saw last year. I mean, we saw 660 in July. We said, well, if you don't take it in July, not everyone wants to. I don't think we'll be paying more in October. We didn't. It was still 660, maybe 680 with, storage, et cetera, but it was a wash. We certainly weren't chasing 900 here. So yeah, if you can get it under 800, I think we need to act on that. We haven't made a recommendation to pull the trigger this period of the year just yet, wondering if there isn't a little more weakness. What are we looking at? Well, fertilizer prices south of the border have been coming down. Um, Nitrogen prices generally follow the price of corn. It's a big user. We're not seeing higher prices. Therefore, with grain markets coming down, farmers are going to be a little bit reluctant to want to pay the higher prices, reluctant to pour on as much nitrogen. And therefore, I believe there's room for us to move a bit lower. Now, if everybody jumps on the bandwagon and pays 900, they won't come down. But I think we still have a period in here with what we're seeing. I anticipate, a little bit lower prices in October, November for corn. And I still think over 800 is not residing to have to pay that just yet. We'll see if we can get it here down under 800.
Okay, good. Well, thanks again, David, for coming on today and giving us a little bit of an update of what to expect in the markets. I think you're right. There's a lot of grain in a lot of the bins, especially in areas where the crop was good, and so I think a lot of producers are in that situation because they maybe didn't price as much earlier on, and now they're sitting and wanting to market. So, thanks again, David, and we'll be talking to you again.
Well, thank you for having me again, Lionel. Always a pleasure.
Great. Well, we're going to continue on here with a few more slides just to end the day today. Next week, I'm planning on maybe a year-end update and review of kind of what we've seen. So we could be looking at presentations from a lot of the people on the crop scouting panel, plus maybe some of the people that were guest speakers. Here's the crop extension specialist list, our contact information. So if you have questions, feel free to give us a call. Livestock people, I think Dave made a good point there about maybe watching that market because we've been seeing some pretty good prices. And so if you got some calves to sell or you're thinking about selling or you want to talk to somebody about selling, give any one of these people a call and they can either get you onto some of our marketing people or give Dave a call. Manitoba Hay Listing Service. There's the website there. So if you got hay to buy or you want to sell hay, definitely put it on there. It's a well-used site for people that are looking or wanting to sell. crop residue burning program is on. So if you're looking at doing some fall work and want to do some burning, make sure it's a burning day. And if not, you'll need a permit. The MASC store places in Manitoba. I shouldn't say stores, offices, and their locations and phone numbers. Just a reminder of the two that just opened, one in Shoal Lake and one in Verdun. Remember that your harvest production reports are going to be due fairly soon. So if you're done harvest and you get some, they're talking for some rain on the weekends, you get some time this weekend, maybe start putting some of your numbers together. And if you got questions, there's my information and Lori's information. Join us next week, October 15th, for the next Crop Talk. Thank you.